Hello and welcome. Today I'm gonna show you what is liquidity sweep and how we can use it in our trading strategy, okay? Because as you know, liquidity sweep is for me one of the most important confluences because it shows us that liquidity has indeed been swept and we have the chance that we will reverse the trend and then catch bigger trades, all right? So let's go first into our painter, and I want to quickly explain you how a liquidity sweep looks like, what it is, and why it is important for trading. So as you know, for example, when we have a bearish trend, it would look like this. The price would go down, 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 and then what would happen, what would have to happen that we change this trend from bearish trend into a bullish one? What would have to happen? Well, the banks who are dictating which trend we are into, they need money. They need additional money so that they can just unload the shares into the market or buy them at a cheaper price or more expensive price if they are selling. And once that happens, then we can change the trend. Okay, so what will the bank do? The banks know that people have stop losses everywhere here, because those people who are betting that we will go higher, they put stop loss here below the lows. Okay, and then they get stopped out by this move down. So they put again one stop loss here because they are betting that the price will go higher, but they get stopped out again and again and again and again. Okay, so banks are targeting those stop losses below so that people are forced to sell, banks then buy for cheaper price, and then the price explodes. Okay, so what will happen? The bank will then, we are right now here at this point, what will happen? The bank will go lower, people will be forced to sell, banks will buy all of these prices, all of those stocks for a cheaper price, and then we will reverse the trend. So this thing is called liquidity sweep. Okay, liquidity sweep is actually, if we explain it very simply, it actually means that we just force people to sell and then we use that money to go in our direction. That would be the simplest explanation what liquidity sweep is. And then now that we are in a bullish trend, okay, so now we are going upwards, what happens? People are putting their stop losses here below because they are buying. Okay, those people are buying, but there are also people who are selling because they said that, okay, we made this lower high, so we will go now lower, so they put stop loss here, but they get stopped out. And then here are people who are thinking that this is now the point where we should go short, but we don't go. And then there are also people here who think that we should go short, but we don't go. Okay, and remember that we also have people on the other side who are shorting here. So what does the bank do? Okay, the bank says, all right, we have an amazing move up, so now it's time that we change the direction to the downside again. So what will they do? They will go lower a little bit, people will start shorting here as well because of this move down. Okay, and then the bank will increase the price, and what will happen? The bank will force those people to sell, so this is liquidity sweep. They will force those people to sell, and maybe they will even force those people to sell. Okay, so yeah, then the bank pushes the price up. All of those people, you see, all of those people here have to sell, okay, so that the bank can buy cheaper at this price, and then we go lower. So this is actually again a liquidity sweep. You see, here is a liquidity sweep, here is liquidity sweep, here is liquidity sweep. So now how do we identify where liquidity is resting? Okay, it is resting below the lows and above the highs. So how do we identify the high? The high is a move up and a move down. So that would be a green candle and a red candle. What is a low? A low is a move down and a move up. So that would be a red candle and that would be a green candle. And then here people have stop losses, okay? So now let's go to the chart and let's choose some random crypto, okay? Because today normal stock market is closed, so we can use crypto instead. For example, let's use Hyperliquid, for example. So let's go to our trading view, let's write Hype USD. Which one are we gonna take? I like to take, let's take capital.com. All right, let's turn off all the indicators and let's go now on the 1 hour chart. So how do we identify liquidity? Identify. We have to take a look at previous day low and previous day high. We have to take a look at 4 hour highs and lows, 1 hour highs and lows, and session highs and lows. Okay, so this is our liquidity, as well as 4 hour fair value gap and 1 hour fair value gaps. Okay, so let's go now to the chart. Let's begin with the daily chart. Okay, so where do we have liquidity on the daily chart? Remember, liquidity is move up and a move down. So here we have a move up and a move down. Okay, then here we have a move down and a move up. Okay, so this is a low, this is a high, and you can immediately see that this here was a liquidity sweep. You see why? Because here we have a high and then the price goes through the high and then continues lower. For example, let's go for example here on those charts. Okay, look, what do we have here? Here we have a low, the price goes through the low and then continues higher a little bit. Then here we have another low. What does the price do? The price goes down, sweeps liquidity, and then continues higher. What do we have here? Here we have the beginning of daily fair value gap. Okay, because why? This is a fair value gap. The price goes down into the fair value gap and continues higher. Okay, so now let's go to 4 hour chart, for example. Let's delete all of this and let's identify liquidity sweeps. Look, here we have immediately one. This is a low, move down and a move up, that's a low. What do? We sweep liquidity and we continue higher. Okay, then what else do we have? For example, here, look, we have a move down and a move up, so that's a low. We sweep liquidity here and then we continue higher. What do we have here? We have at the beginning of a fair value gap, like this. What does the price do? The price goes into the fair value gap and continues higher. It's that simple. What do we have here, for example? Here we have one high, here we have another high. Why? Because that's a move up and a move down. Here we have another high, but you see the price goes up, sweeps all of those highs, and then continues lower. For example, what do we have here? Here we have a low, the price goes through the low, sweeps the low, and continues higher. All right, let's go to 1 hour chart. What do we have on the 1 hour chart? For example, here we have move up and a move down, that's a high. The price goes through the high, barely through the high. Okay, let me zoom it a little bit. The price goes barely through the high and continues lower and lower and lower. And what happens afterwards? Here we have, what do we have here? We have fair value gap. Here is the beginning of 1 hour fair value gap. The price touches the fair value gap and continues higher and higher. For example, here if we also delete this. What do we have here? Here we have little mini liquidity sweep, and then we continue higher. We sweep perhaps this little high. Nah, we just touch it. But yeah, then what do we happen again? What happens again? The price continues lower and lower, sweeps liquidity here and continues higher. Then we go up until this high. What do we do here? We sweep liquidity, we continue lower. You see what I'm saying? Then what do we have here? We have a low, move down and a move up, that's a low. We sweep liquidity and we continue higher and higher and higher and higher. It's so logical, bro. It's so logical. So what I want to tell you is actually, look, liquidity sweep happens on every single time frame, on every single asset, okay? And liquidity sweep, as you can see, it's necessary, bro. It's necessary that the price moves the way that it does, okay? Because what does the bank do, for example, in this case? Let me show you. What does the bank do? Oops, sorry. Come on, man. Now it's all chaotic here. For example, sorry for this. Here we have a low, okay? And what I wanted to show you is, for example, what does the bank do at this point here when they sweep liquidity? So here they could buy for cheaper, okay? Here they bought stocks for cheaper, and then over here they could sell them for more expensive price, okay? So they have a massive profit, okay? Or for example, when the banks wanted to go short, okay? Let's try to identify, for example, here, okay? Here we have a high, and then here we have a liquidity sweep. You see what happened here? So here the banks pushed the price up, okay? Why did they push the price up? So that they could start selling. They could start selling for the higher price, and they wanted to sell all the way down here, okay? So here at this point, for example, they wanted to buy, okay, for a cheaper price, and then they wanted to push the price up, okay? And then here sell it, and then start selling at this point, okay? So then start shorting, and then go lower and lower and lower. This is the whole point of liquidity sweep, okay? The banks are buying low, selling high, and then selling high and buying low. That's the whole point of it, okay? So once you identify liquidity sweeps, once you pay attention a little bit to how the market works, you will see that liquidity sweep is actually one of the crucial parts of ICT concepts and of the market movement in general, okay? So homework for you right now is, until the next week, what you have to do is find 10 bearish liquidity sweeps and 10 bullish liquidity sweeps, okay? So let me show you here again. What is a bearish liquidity sweep? Let's delete all of this, and I want to show you what is a bearish and what is a bullish liquidity sweep, okay? So a bullish liquidity sweep would be this, okay? This is bullish, and what is bearish liquidity sweep is this, all right? So you have here bullish one, and here you have the bearish one. Now, at this point, I also invite you to join our trading Discord server, okay? It's for free, I'm not selling anything. Feel free to join. Here we have daily analysis, we have trade breakdown, we have then like educational tutorials and so on and so on and so on. So feel free to join, and also please don't forget to subscribe to my YouTube channel. And bro, you are more than welcome. That's about it. Do the hard work and see you on top of the world.